Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Hey, I gotta fix my volume here. Hold on. Yeah, there we go. Hey, it is Monday. You know what? Today was likely to be a little bit quiet. We do got some Fed speakers and we do have end of month flows. So I think that we'll probably get some decent activity to trade today, but it is going to be quieter. The rest of the week, we've got a lot of big news, including those PMI numbers are going to be really important, telling us how much the economy has slowed down because of Omicron variant. And we're going to get the non-farms numbers, of course. And then next week, CPI. So you thought that markets were crazy. Well, I think that we're going to continue to see a lot of trade. So let's go and see where we are at over the weekend. If I can even find my chart. You know, sometimes I forget to bring it up before I start. All right, so here you can see S&P 500. Friday, we did have a little bit of a recovery. Now, here today, just keep in mind, there is a lot of short options out there. And I mean a lot. Oh my gosh, we need to fix this. I'm just noticing now that our live stream is not public. All right, done and done. Now we should see. Okay, anyways, so we have a possibility for a really strong short squeeze today after the S&P 500 opens, because we're opening a little bit higher and everybody has this put protection, and the end of month flows tend to be buying flows. All right. Coming over here into the treasuries, we did open a little bit lower and we're kind of starting to head down. And that is because the market is concerned about the possibility of the Federal Reserve doing a double rate hike in March instead of just one. Now, that very much depends on what the numbers are next week, okay, for the CPI. Coming over here to oil. Oil still within its range, which, you know, I would like to see oil higher, but actually, I would love for it to come back here a little bit for us and give us a good entry. But we have OPEC this week, so oil also pretty volatile. Now, natural gas is opening higher, which is not particularly good. We're heading back up into the $5 range, but we're coming back. I think here in this case, there's just a lot of concerns over Ukraine right now. I don't know if anything's going to happen over there, but there's just a lot of concerns about Ukraine. And here is gold. Well, maybe they can make it back up to that 1800 area. I mean, that's been an awfully big magnet. They've been sticking around there for a long time, but they sure did not react very well to the news last week that when, you know, interest rates all spiked. So that's gold and silver. And, you know, the copper didn't necessarily either. So I think there is still some concerns about the global economy here, and especially in China, right? Because China is basically easing now, okay? And that matters very much to us right now as well. And then we got to come over here and check out the cryptocurrencies. Oh boy, what happened over here? Well, there was a little bit of, you know, activity last week. They tried making some moves off of certain pieces of news and so forth, but ultimately Bitcoin is right about where they were 3,700. You know, there's still, I think, some risk that another big guy sells and pushes us lower. So, and then overall, the economic environment doesn't look very good for Bitcoin, right? And then we got the dollar still hovering up at 97. So that's where we're at. And the Treasury sure is moving aggressively there, but we are starting to see some reloading there at 22.5. So let's just kind of give a little pause here and see what happens. Well, let's see here. Good morning, Bostic opens the door. Yes. Okay, and sure enough, they did tick it up and a good bid and pulling up in there. So, maybe they were getting a little ahead of themselves. I think that we probably do want to buy the treasuries today. I think that the better trade is to go long ES. Um, but where at? Well, 44.05 is as good a price as any. So that. Bloomberg, if I've pissed you off, I'm sorry. Joe Rogan apologizes as Spotify seeks to end a controversy over coronavirus misinformation that wiped almost $4 billion from its market value last week. Comments come after Spotify published its content rules. Let's see here. Joe Rogan pledged more balance and better research for his podcast in an apology aimed at quelling growing controversy about misleading coronavirus information that wiped almost $4 billion from Spotify Technology's market value last week. Well, the whole market and technology in general was getting routed. So I don't know. It's hard to separate how much of that was from Joe Rogan and how much of that was just the market going down in general. If I pissed you off, I'm sorry, Rogan said in an Instagram video, while also thanking listeners who have enjoyed his podcast. He said he would try harder to get people with differing opinions on right afterwards. I think that is so very much the right call, Joe. That guy, he did say things that I think were incorrect, and I would love to see somebody come on his show and, you know, go point by point and point out all the things that guy said that were wrong, or maybe after that have them like both on for a debate or something. I don't know. Be interesting to see how well Joe Rogan handles a debate, right? Do my best to make sure I have researched these topics, the controversial ones in particular, and have all the pertinent facts at hand before I discuss them. Very good. Well, I want to thank Spotify for being so supportive during this time, and I'm very sorry that this is happening to them and that they are taking so much heat from it. Well, I'm so far watching this controversy. So if you guys aren't familiar, Joe Rogan had this guy, some doctor that apparently was involved in the development of RNA vaccines that is kind of been opposed to them and has kind of become an anti-vaxxer to well, not to some extent. Like, he is an anti-vaxxer, and he's been sharing a lot of anti-vax what I would say is misinformation. When I went and I did my research, the things that he was saying about it weren't accurate. It seemed like that doctor wasn't really doing very effective research on it. So a bunch of the left has decided to come for him now. And they're saying, well, I'm gonna cancel my Spotify subscription and all of these things until you get rid of Joe Rogan. And I don't think that that's going to work, because the whole reason Spotify hired Joe Rogan was because of this kind of controversy. And he is handling it well here, I think, by saying, he didn't come in and say, oh, well, all of these things are true or be anti-vaxxer. He just said, I'm sorry if I made you mad, but I try to do my research and have people with differing opinions. And maybe I should have had somebody on to counter him sooner. But I think that means that he is going to have somebody on that's going to counter him, which should be very, very interesting. So I think Spotify is handling it really well so far. Maybe, just maybe, they're able to show over the long run that protecting free speech as a company is the better business decision. But we shall see. Okay, they're having a little bit of trouble covering 22 half, but there has been quite a bit of volume there throughout the session so far. So about 13,000 contracts traded at 22 half. And oh, we did get our fill over here in the 10 year. I think that for this one, well, yeah, I think for this one, I'll take a contract off at 10 points. So I am hoping to be able to run this long. Maybe we should cancel YouTube. I mean, it's so I have to say, I find it extremely frustrating because I am trying very, very hard. I'm not Joe Rogan, right? Joe Rogan is like a moderator, really, right? He just interviews people and he's there to ask the right questions, and of course he needs to know as much information about something as possible so that he could like push back against things. Maybe he hasn't done as good of a job of that. But that's not me. My job is to just know what's going on and try and give you guys the most accurate picture of what I think will help you trade, right? And there have certainly been some cases where there was information out there about COVID and especially like when we've gotten into these strains and stuff like that, that I would say was counter to the narrative. I mean, it was kind of funny because it was like the CDC would be saying this stuff, and then at the same time, um, repeating what the CDC was saying could potentially get you deplatformed. You know what I mean? It's so frustrating, and not only that, but then you go and you say the CDC says something, and then they turn around and they're wrong. I mean, that happened too, right? So it's a tough line to play, and then people will come after you because the one time that you said something they didn't like it, it's just like I think many people are just listening to him just to despise this idea of canceling people. Personally, know a few who don't agree with him but support to despise this canceling trend. Yeah, it's like that meme of Spider-Man where they point fingers to each other. Yeah, I do think like this. The thing is that this kind of controversy is good for Joe Rogan and Spotify in the long run. So what we continue to see, this is so frustrating, okay? For like low level creators like myself and mid level creators, it's not a good thing. But for those top level creators, any kind of controversy tends to be good for them and increases their audience, and any kind of negative effect that they get received from it usually blows over unless it really goes over like a tipping point and they really truly get canceled. And that, I mean, that happened to certain entertainers and stuff, but if you survive it, it usually helps you. No such thing as bad there is such a thing as bad publicity, but it's got to be really bad, right? Like if it doesn't kill you, then it makes you stronger. Yeah, that what doesn't kill you makes you stronger. I think that's the case. Yeah. You've seen all these cases over on Twitch. Creators are essentially streaming stuff. Like they will stream other shows that they don't have the rights to or music that they don't have the rights to, specifically so that Twitch will ban them. Because when they get banned and they come back, they get more viewers. They make more money from doing it. It's so retarded. Twitch has to go and do something about that because that website is just because of that kind of cycle, and the fact that the top creators there at Twitch have so much power now relative to everybody else. Because there's not like in YouTube, it's not the same because the algorithm is always swiping people through, you know? But on Twitch, it's basically become the top creators dominate everything. And it's I feel like it's starting to turn into a toxic place. Well, let's see here. Need to make sure I'm just realizing that I didn't have all my little controls out here. Yeah, there we go. And this one too. There we go. Why did I enter the MES? So today I am hoping to see a short covering rally. I From the metrics that I've seen, there is a lot of short. I actually saw Zero Hedge wrote a story about it, but I can't I can't read it. It's for subscribers only, and I stopped subscribing to them. Um, I'll pick them up later, but um, the end of month flows tend to be positive, and there's there's so much short protection on right now. I think that there's a really good chance of a short covering rally in the S&P 500. So that's I liked the price. There was some pretty good, they had kind of been hanging out down there for a while. Pretty good chance that they were going to come up at some point today, and I'm really happy with it. I didn't get any adverse excursion on it, and it went right to my first target. So now that I've built myself up a pretty good buffer, I should be able to hold this for quite some time. No? Yep. Oh, interesting. Oh, interesting. Do you see that? Oh my gosh. Okay. Okay. I think me putting my lot out there screwed them up. Did you see that in the 10-year micro? Me putting a lot out there, they kind of reacted to it. And then the offers pulled, and the offers were like way up at 1.840 temporarily. Okay, so they did take it and push through me. Okay. Well, I might have been able to have gotten a better position there. I'd been a little bit patient. I could have maybe have gotten 14 or 12, but we'll see. So there was a pretty big iceberg there at 22 that they did not end up pushing through. So we need to keep an eye on here. Also, we are seeing a significant move in the dollar. We just dropped about 10 cents here recently. So, well, that's not particularly encouraging. He does. Let's see here. The Taleb? Taleb's UK's herd immunity risk blind strategy hinges on unempirical psychoplaster's theory about crisis fatigue and nudging BS assumes no reinfection. Hospitals will not be overwhelmed with secondary deaths. Disease must return. No vaccine is coming. Total IYI lunacy. And that was a long time ago. And now he's saying, by the way, vaccines save us. You need to give credit to what has been getting us out of COVID, turning it into a less lethal. Yeah, he's right, actually. I think I have to agree with him on that case. Um, every time I look at the number of cases out there, and it's some of the numbers are pretty staggering, and of course some of them might be exaggerated. There's probably a lot of error in the data, but even if you account for error in the data, I think that it is a case that it would have been really rough if not for the vaccine. So, hmm. Bitfinex complaining about Bitfinex again. Yes. Every time they run short on cash, they just make a new Ponzi with the help of third parties and friends. That's what it seems like happens to me. Well, man, it was like as soon as I took it, they just really ran here. Huh. There is a little bit of pushback here at 24. May have just been the case that they were a little bit too short. Hey, AO, how are you doing? The in the ZN, that is just a sim position that I've had on since December, right? But when I take these positions in the 10-year, those are real. I'm not going to say that they're always going to be real, but they have been. Maybe I get to the point where there's it's probably going to happen at some point where I feel like I'm on just such a bad run that I'm only going to take sim orders in the micros for a week or two, to try and get myself back on track. It hasn't been very good lately, has it? How is the family? They're doing okay. Or they've been fine. I've been the one with problems all lately. Man, I am like, oh, I saw your one lot. Yeah. Yeah, no, it totally did. And did you see how it was like as soon as they took me, then it was like, and they reacted to it. I feel like that they're coming down just to stop me out. I feel like that's what's happening because it wasn't that everything was quiet until I did something, and the micro tens at the very least definitely reacted to it. You see that? They went right to -10 there. That sucks. But you know what? So it's going to happen to you sometimes. You're probably right, Ash K. Akshay. But it's pretty hard to not feel like that's what happened when like here's the thing. If that was the case, what would have been different? Nothing would have been different, right? But it was weird. It was really weird to me that the robot canceled all of his orders. What was with that? What was with that? Canceled all of his orders so that like we couldn't hit into it. Maybe he was trying to say, no, I'm not going to let any of you guys, I'm not going to let you market into this because we're going to push it the other way here. I don't know. Well, and let's see here. Okay, so it was a steepener as we moved, but I think that what drove this move was that move in the dollar, right? The dollar came down. So I don't think that rules out trying to take any longs on the yield again today, Oh, I'm sure that there are people watching my stream. Um like here's the thing again is you kind of almost have to assume that that's happening just because it's to your advantage to do that, right? Don't you want to try and take a trade where you're going to win even if they're totally watching you and trying to screw you over? Right? Why trade the micros the end? Because it's less risk. It's sort of that simple. I would, of course, prefer to just trade the 10-year, but over the course of the year, the amount of risk I might end up losing on the 10-year is more than I'm comfortable with. So how liquid is it? Well, so I would say like you always have the liquidity to make an execution if you want, but the spread in it is not very good, relatively speaking, right? Here, this is okay when it's only one, but when it's two, that can be rough. And it does seem that the market makers kind of adjust to it. Like, is if I were to buy it in here at 804, well, I guess that would be bad example because if I were to buy in there, they're gonna want to just keep it there and or bury me. But if I'm ever able to catch a limit order, I don't know how if it counts and it says, well, I wasn't all of those orders, and so somebody went. It's like if I took a fill short at 1.803, then all of a sudden 1.803 is the best bid, right? A whole day on the micro 10 average is about 20 minutes of ZN. Yeah. But I will say that on some days, the volume in the 10-year has been quite good. And there are definitely some things about it that can be advantageous for certain situations, right? These big moves that we've had in these swings, I think I would rather want to play it on the micros, right? Another thing that's interesting about the micros is that it is based on the yield, and that does yield differences. For instance, you can see very clearly the difference between a 7-year bond yield and a 10-year yield, and there are often instances where the 5 and 7 essentially move and the micro doesn't. So I don't know. Okay, so they come back to 1.8 and they're pushing down through it. That's just curious. The way that it moved through here, right, is like kind of looks like there's inverse sine law going on here. But we do have to kind of keep on our toes in case another order comes down and slams us back down. I suppose that the end of month flows is going to tend to be long. And maybe because of all of the activity and everything, maybe it's really backdated. Like they're all doing it today, whereas in past they might have done more earlier in the month. I don't know if 1.8 is a very good place to try and get in, but maybe it's a buy all the things day, yeah? I guess when I started this, I didn't necessarily think that like, oh yeah, like they're really going to sell the treasure here. There's just this big. It was more like ES is heading up. That seems to be pushing them down. The order flow seems to support it, but that iceberg at 22 really did end up being the the reversal point, right? I suppose if we wanted to try and think of it, it's like always assume the best of people, right? It was like, well, they knew that was me and they knew it was going to go the other way. And that's why they were pulling so that I couldn't hit into it. But then when I refused to pull my limit order, they tried to push through it strongly so that I knew right away, okay, this isn't going to work out very well, Seth. You don't want to go long micros today. Okay. Message received. Mm-mm-mm. Given the historical nature of Biden's pick and the uphill battle Republicans face to sink the nominee, Democrats are cautiously hopeful that they can peel off at least one GOP senator, which would let them tout the win as bipartisan. Oh, I think that they'll be able to pull off more than one. I'm going to bet you that 2 or 3 or 4 Republicans will cross over to pick the nominee. Of course, It depends. You can't pick a nominee that is like a Marxist, but I don't think that they're going to do that. Don't think that they're going to do that. So there will be a lot of drama over it, but I think that in the end, it won't be that big of a deal. Hmm. Well, at the moment, they don't look too eager to push below that price. So I'm not necessarily seeing the dollar back off there, though. Yeah, the dollar keeps pushing there. Hmm. It looks like somebody bought there at 1.8 and then bailed at 1.799. Okay, cool. I was a little concerned about that entry at first, but it ended up being okay. There is a little bit of fight in here, though. How often do you use limit versus market orders in the micro treasuries? That's a good question. I think I would say that I'm more likely to be a market order, but that it's not really very consistent. It just kind of depends on the situation and how desperate I am to get in, I guess. You know? Hmm. Hum. Sure enough, as soon as I get it filled, now we get the strongest sell that we've had. How do you handle your stop? Well, I usually have a set amount of risk that I'm taking, and if they get there, then I just mark it out. I prefer to do it manually here in the micros, but over here with my with my sim trades, I just like that's totally degenerate there. Like the thing that is difficult is that you really don't want the stop to get hit, right? Like the less your stop gets hit, generally the more likely you are in the short term to make money. But if you start putting too big of a stop and everything else like that, then that'll screw you over real quick, right? Yeah. The issue with putting the limit orders out there, especially in the micros, is that you're really not going to get filled without adverse excursion. You're really not going to get filled without adverse excursion. So, do you trade the euro dollar? So, no, I haven't looked at those. It sounds like the SOFR contracts are starting to get a decent amount of volume, though. Market orders are in the micros. You get a lot of slippage. I gotta admit. Well, seems like they just don't want me to play today. The dollar is still look at the dollar just chilling out there down at right at the lows though. It looks like nothing is well, I wouldn't say that's completely accurate. The S&P 500 did take a pretty good move. I mean, 10 points on a relative basis doesn't is not very much right now, but we did have a pretty decent move over in the micros. And the dollar really moved. The dollar really moved. You're also, by the way, seeing gold move up because of the dollar falling there. Oh, they did say that they're going to convert all the euro dollar contracts to SOFR so the euro dollar is in fact going away then, huh? I don't know. Every once in a while, I'd have somebody come in that told me that they were trying to do euro dollar, but then they disappear and I never hear from them again. So I don't necessarily, I've never met anybody, a retail trader that was doing euro dollars and was successful with it. Standard Chartered. I don't know who that is. U.S. Treasury yield curve to flatten and possibly invert this year. U.S. Treasury yield curve is expected to be completely flat by mid-year as the Fed hikes rates, but growth is called into question and potentially invert by year end. Okay, that's not a crazy prediction. I think that you're going to overall see the yield curve continue to flatten because there's concerns about inflation in the short term, but in the long term, the treasuries seem to be saying to me that the more generational forces that have been deflationary are going to continue to be deflationary, and so any kind of inflationary rise that we have right now is likely to be very short lived, especially if the Federal Reserve is there to try and get ahead of it. So some buying right there at 0.42 in the 5 year and uh, just kind of icing. Okay, well they did get through it. S&P 5 is 100 is trading exactly at Friday's close right now. No, isn't it up a little bit? I have to go back over here. Well, I guess it is right at 5 days close, but you got to remember that there was like that huge buy up at the just before the close. Or most of the session they were at 43.80. But I'm expecting to see a buy flow here in the ES, and so far it's been coming through. Now, I mean, it's limited. I certainly think that you could argue that the action we've seen so far in the equities is just pre-market noise, but we'll see what happens when they open. But I guess my point is I wouldn't completely dismiss it all as just noise because this is more activity than we see pre-market on a Monday than usual. And I think the reason is because it's the last day of the month. And I think that it appears to me that these guys held all of their volume until the very last day. Okay. Now they're reloading on the bid. Hmm. Kyoto News reports Tokyo's population dips for the first time in 26 years, like mid the pandemic. Oh, yeah, people moved out, huh? Well, that's definitely something that you saw pretty much everywhere, right? And it's okay, actually. If you want to post a link, you could put it in the interest rates channel in Discord, but I can find it myself. I believe you. Hmm, that was a new high there, wasn't it? Yeah. But look, he's icing on the bid again. So like that initial move I think looked very much like correlation. Like there was some iceberging on the edge, but then they ran through very quickly. So then, kind of what I would normally expect to see when we get up here at the top is like the book becoming more market order driven. But instead, I'm seeing a lot of iceberging on across all of the treasuries. So this is kind of starting to look more like a bubble up market to me. Mhm. And the 30-year takes a tick up. So the 30-year is kind of starting to push a little bit harder on this next leg, which has brought the spread back down, curiously enough. Then now a little bit of a hit there in the 5-year. What time is it? Oh, okay, it's so I was like, why do I hear the garage door opening? Oh, it's because she's got to take the kid to band practice. Well, this is around the time that if we were going to see another leg in the S&P 500, it would probably be about now, yeah? There the 5-year ticks up too. Haven't seen very many orders hitting into the 10 though at 28 half. That could certainly change if they were to start hitting into 0.55 in the 5-year. And I have to watch this Instagram post. Oh man, Joe Rogan made that video that I was referencing where Joe Rogan addressed the controversy was a 10-minute video on Instagram. I didn't know that you were allowed to do videos that big on Instagram. Okay, well, it looks like the 10 dragged them down. In the end, the 10 won. The 5 and the 30 didn't continue. What? Nassim Nicholas Taleb tweets, a weightlifter at my gym in New York tried to convince me that the vax was quote unquote not natural. He had been on anabolic steroids for a decade. People have mental silos. Oh, yeah, they do. Are you ever playing earnings? You know, I don't play individual stocks very often and not earnings. So, you know, when it comes to speculation, and by the way, the video that I'm putting out today after this stream, so You stick around, the stream will automatically forward you to the new video. And it's a big deal video, okay? This is like for the order flow stuff, it's like one of the most important ones. Now, for you guys that are listening here on stream every day, you're probably going to know a lot of this stuff, but we're going to go into big detail about like the square root law and all these sorts of things. And you know, one of the things I talk about is there's order clustering, that the activity is not uniformly distributed through the market, that when you see an order, you're more likely to see more orders, and that impact is actually very long lasting as well. So that kind of means that I would prefer to take a trade when things are quiet. So when something is like, you know, everybody's looking at it, and there's everybody's paying attention to it, you'll notice that I'm much more reluctant to get into it. Like with the GameStop thing, like I knew over the weekend that it was becoming a thing and that it would probably jump on Monday. But then after that first Monday, and it like became like a big meme, you see how I almost immediately lost interest in it, right? Because I know that when everybody and their dog is out there buying it, that's probably peak interest, and I want to get out there, right? So earnings would be a time when there's a lot of interest on the stock, and you're not likely to get a very good price. And any kind of position that you take is, you know, they're just gonna like create volatility and shake it around. It's not very fun. Well, back to 27. At what price did I exited it too late. It was like, I don't even remember now. So like there was the day when it came out that the short interest had declined or whatever, and I didn't understand that news very well. And then the next day, um, you know, there was like the massacre, and I think I gave up after that. So I still made money on the position because I got a really low entry, but I didn't make nearly as much as I should have. Well, you know what? I'm really uncomfortable with the way that the treasury is sloshing around today. I have not been able to catch a break in the micros in quite some time, have I? Got 3 favorable ticks on that one. Jeez. It may well be the case that I'm being like the stop that I'm holding is a little bit too tight anyways, but they're also just thrashing me around. Like I'm getting the edges here and then it's immediately going the other way. I'm completely off sync with the market in the micros. I'm frustrated enough in that I may just sit on my hands the rest of the session for the 10-year. We still got an okay trade going in the ES. Turns out that most weightlifters do steroids and most weightlifters are anti-vax. Is that really the case? AOC claims that two men in MAGA hats threw economic textbooks at her. What? Jeez. It's not. I'm laughing, but it's not funny. Don't do things like that, guys. It's not funny. Really need to. I feel the strong desire to do something in the 10-year, but I don't see why I want to do anything. What makes me think that it's going to go one way or the other right now? Well, here in 15 minutes we'll have the S&P 500 open, and at that point I think we are likely to see another move in the treasuries. Judicial Watch's Tom Fitton obtained documents that says he showed Babbitt was shot for no good reason. Judicial Watch and Townfall. I hope that their family sues something like that, because I actually saw some stuff that showed that she was like trying to like uh, prevent people from doing stuff and everything, and doesn't seem to me like that she should have been shot. How can you connect NinjaTrader to equities intraday? Is there free sim data out there? I don't know of any free sim data for equities that's intraday. You can get the end of day data from Kinetic, right? Maybe Yahoo would give it to you. What do you think about equity trade? I think it's a different game. I think it's a different game. You're probably going to need a slightly large, well, not a slightly, you're probably going to need a larger account to do it. Victosi thinks it's easier. I mean, it probably is easier in general, but I think that at that point it kind of becomes irrelevant. Like when you look at the number of people that are successful, it's still ridiculously low in ES, right? So it's still really hard to be successful doing it in equities trading. It's just the thing that I think makes equity trading a little bit different is that you can look for the same kind of move every time. So if you really like these strong market order driven moves, you can go and find stocks that are going to be more conducive to that kind of an action. And you can, how do we say, um, you have to do a lot of research though. Like that's the thing is you really want to know what they are before it opens, and you're going to spend all day looking into stocks and finding out everything that you can about them. So it's actually more work in the end. See, here once again, as soon as I got out, it came back. Hmm. I don't know. I mean, it does look like they're starting another bull run, but UK Prime Minister Boris Johnson says a Russian invasion would be an absolute disaster for the world and a disaster for Russia. Yeah, I think it would be. Well, it came up 2 ticks. See, we'll recenter ourselves there. Ukraine probably has a couple trillion in resources, so I think invading it would be a good. No, well, no. So this is more complicated than that. I don't think that he strictly just wants the resources. I don't think that that's really a major factor. I think it's more the place in general. So where was it that Russia took over? Georgia or whatever? I forget if Russia has Sevastopol or not. But oh, it was Crimea. Oh, that is where they took. Okay. So like Russia took over this area right here, right? Because it gives them access to the Black Sea and thus the Mediterranean, right? But there's a lot of port there on Ukraine, right? Without it, you got like Russia is basically cut off from those shipping lanes because nobody wants to come up through here. All right. Um, and it's just like the oil pipelines and everything they kind of got to go through there. So it holds extremely significant strategic significance for Russia. That's why they want it. They have extremely significant strategic significance. So I don't think it's just that they're concerned about being like what is the word corralled in by NATO. You know, they don't want Ukraine to join NATO, sure, but I think that the bigger thing is that if there was a conflict between the United States or between NATO and Russia, Ukraine would be a pivotal location where that battle would take place. So the last thing that they want is for NATO to take over Ukraine and have missiles there, right? So that's the main reason. If it was just for their resources, I don't think that one would make very much sense because the Russian economy is going to get decimated if they invade. Like they will get cut off from Swift. It'll be a real disaster. It'll be a real disaster if they invade, I think. One that could have negative economic consequences for the whole world, frankly. Okay. That was a little odd. So the 10-year ticked down, but the micros aren't adjusting for it correctly. Yeah, they will, but they will get cut off from Swift. I'm just saying, like if Russia invades, they will be cut off from basically all commerce with the Western world. They will leverage back. But okay, good luck with that one. Good luck with that one. Especially since Russia's been banning cryptocurrency. Okay, so S&P has been coming down here into the open. And then the other thing is that it will spot it, like the cost of oil will just like skyrocket, and natural gas will just skyrocket, and that's going to have really negative consequences for everybody too. So that'll be more energy driven inflation. It's not very positive for the economy. Okay, this is a big iceberg at 25. 5-year came back quite a bit though. You can see the flattening going on here. The old China India ruble gateway. What do you think about? What do you mean? What do I think about it? Day trading crypto is probably not a good idea. Maybe you do arbitrage, but well, it is nice that you get order flow, but like the adverse excursion that you risk in cryptocurrency is insane, right? Just one bad move and it could wipe out your account easily. And you got to remember that I want to trade with order flow, obviously, but if all I have is order flow, I don't think that's necessarily a good trade. The market makers account for that stuff quite well. In the earlier days, it was easier to do arbitrage crypto. There's probably still a lot of arbitrage opportunities, just that wouldn't be as simple, right? Like just trying to arbitrage Bitcoin itself between two exchanges might not work very well, but maybe certain shit coins and who knows what else. Well, I am so done with this today. I am on such a terrible losing streak in the micros. It's very frustrating. How do you trade it with a disintegrated market with multiple exchanges? Well, so the thing is I think that you're trying to take it from this perspective of like, if I know every order that's coming through in the market, then I can predict where the market is going to go. And it doesn't work like that. Okay. But what will happen though is that the robots, if they're good robots, they're going to be factoring in that stuff, right? They're going to be watching other markets and seeing the orders that are going in other markets and doing things. So you can kind of watch the order flow to kind of give you information that you're otherwise lacking in some, particularly as it pertains to the arbitrage strategies and correlations and stuff. So I can still come in here and watch an individual asset, and if they're seeing something on the other exchange, I should see some orders start coming through on this exchange. So it all kind of evens out in the end. Yeah, the bigger issue in cryptocurrency again is that well there's a couple of things, right? One is that you can just have a really insane move against you. Two is that the exchanges will actively trade against you. They like know your positions and will actively trade against you, right? And then the exchanges just aren't reputable at all. Can you guys remember how many people were encouraging us to go and trade on um the what was it, the future, it was like a future, their push was that we were the Bitcoin futures exchange, right? And then that one ended up being like a complete fraud, and anybody that had money in it lost it. Just saying. Yeah, we need to move the curtain here. Hold on. Why is ZB's range so small today? I don't really feel like it's that small. Considering that we have now traded all the way down and now it looks like we're going to trade all the way back up, that's actually quite a bit of movement for the treasuries on a day that's doesn't have a really super big economic report. I want to know why I can't seem to get anything over there. What the heck? Like, seriously. Out of the three trades that I took 30 ticks adverse excursion and 3 ticks favorable excursion. And I had trades both ways. So I am doing something super wrong. Oh, so by the way, did they ever? No, they did not. I was going to say, did they ever push back to 44.05? But they did not. Looks like there's an initial sell, but well, no, it wasn't very strong. In fact, the delta on the open in the MES is positive. Well, I don't know if 15 would be a good place to try and get in because there's probably going to be a lot of noise up here, but that kind of strengthens my opinion of the long in ES. What treasuries do with it remains to be seen. Think that they'll probably try and push below 44.05, right? That was close. Okay. Well, if this ends up being like a really strong sell, that's gonna be really interesting. I don't think that that was gonna happen, but if it did end up being a strong sell today, then that could just cause even more chaos in the markets, right? Okay, here's the buyer pushback. Seems like by the way, looking at like my AMA relative volume and everything else, like there's a really high amount of activity in the 5 year today. Like the micro 5 year, that volume right there, and the 5 year is unusually high. Looks like some sellers in the water. While the overall deltas have been buys. So this is kind of one of the weird things is that there is a lot of autocorrelation in order signs in um, markets, but that doesn't necessarily always. That's not always the direction price goes. Very good. So that was a good leg there. The volume is very much buy volume though. Now the question is, what do the treasuries do with all of that? Okay, the treasuries sold on that. John warning me that the 200-day moving average is at 44.24. Could offer some resistance. Something again, like anytime that I test these like lines, I'll often find that like the behavior around certain points are like particularly random. Like all those points that retail traders look for, the data appears to be particularly random. It's like instead of it being like a certain percentage chance is going to go this way or that way, like the retail traders think, it's like them participating in those locations just makes it more likely to chop around. And there are people, there's just a lot of random order flow there. Be nice if they just blasted through it. Because again, I think that we're going to see some short covering today. Hmm. Well, Futures Trader 71 is forwarding a video of somebody talking about that. The last day of the month flows if we're down. Let's see here. Well, I'm watching this video, and I'm already looking at what he's doing, and I'm not impressed. Because he's saying, okay, so what happens if it's the last day of the month and we're under the 200-day moving average? What tends to happen is what he's doing. $20 samples. This is total nonsense. This is total nonsense. 20 samples? Are you kidding me? This is total nonsense. I'm not impressed. FD71 retweeted somebody called InvestiQuant, and he did an analysis where he said, what happens if we're below the 100 or 200 day moving average and it's the last day of the month? And they had 20 samples, and they said it tends to slightly favor longs. And that's what a load of bullshit. 20 samples doesn't mean jack shit, especially not the way the markets trade fat tells and stuff. I don't think that he just says whatever will generate trade volume from clients, but I think that he still believes in certain pieces of technical analysis that don't really have edge. We'll see. We'll see if they close. But I think that the reason that I'm like so opposed to this video, one, because their kind of analysis that they're doing is flawed to begin with. Two, they made a video basically about a data set where they only have 20 samples, which is just absolutely ridiculous. And then number three is that it leaves out the most important factor in today's setup, which is the extremely high amount of put protection out there. So, yeah, nothing against him, but the thing that he tweeted, it was I'm kind of no. Let's see here. Partygate report is out. One headline says excessive alcohol consumption is inappropriate. Okay. British politics. apparently the report on Partygate is a big deal for British politicians. It is true. Well, now they're to almost to 30. Looks like they just got slammed by somebody there. A little bit of volume left behind at the 30. I think my interval widths in this chart are off a little bit because I really should only be seeing one bright yellow one at 30, but that's okay. Wheat trades down 1% from its previous close. So wheat had like a crazy day on. A crazy day on Friday. Or was it Thursday? I can't remember. What about corn? What has corn been doing? Because corn's been moving. Corn's taking a hit today too. Hey, maybe they give us a good spot to get into corn and wheat. Maybe. Well, we need to look at make sure that there's not something going on. Over here in the treasuries, like the other thing is that on the last day of the month, they tend to buy. So when I thought that there was going to be some continuation short and it didn't happen, then I turned to, back to, okay, they're more likely to buy today. But then after that move up, that happened relatively quickly. In fact, it's been nothing but pullback and quiet. So now I'm kind of wondering if we really have a strong enough order flow to really make money, for me to really make money in the treasuries today. What is this all about? What's going on over here in Discord? Give me a second. Oh, yeah. Just changed this name. Oh yeah, I forgot we had PMIs, huh? Jeez. I'm behind here. Actual 65 spot 2, forecast 61 spot 8. That's good. That's real good. Treasury's not reacting to that at all, huh? Yeah, they've been stuck there at what was essentially the open for quite a bit now, in fact. And yes, by the way, this is kind of like um average buyer position from overnight. So then that might be why they're kind of chopping around here in ES. Then on top of that, again, the moving average, we could just kind of dice around in this area for a bit. There's another tick up. So all of a sudden, the 10-year is looking really good to me. Well, I don't want to try and I think I've already used as much risk as I probably should on a day like today for the treasury, but I do really feel like buying it or selling 1.8 here. That's definitely not one I'm going to pick up. Call from Indiana? Like what? I don't know anybody from India. Indiana. Who would call me? Not India, Indiana. Isn't the New York Fed going to release the 2.5 to 4.5 OMO purchase schedule for Fed today? I hadn't heard anything of that sort. Maybe. A lot of those announcements from the New York Fed I usually don't show up on my calendars. Okay, so are having a little bit of a pullback here and now some iceberging in this location in the ES. The 10 years still looking strong to me, although this could be a pivot area. Could totally flip back down again. You took a trade in oil. Did you go short oil? So oil is falling here a bit. Another scenario, I suppose, in the dollar is like that we really are tightly tied to the dollar today, and if unless the dollar makes another move, the treasury may just stand pat. But if they do make another move, it could be that the dollar sells another good handle because I mean 96 is quite high, right? And then that could mean another move up in the treasury, perhaps. Ooh, that move there in oil is looking a little nasty. Did something happen over there? Oh my gosh, are you wait, what? Yeah. Canadian Prime Minister Justin Trudeau says he has tested positive for COVID-19, is feeling fine, and will work remotely. Okay. What? Oh, that is just like the most bizarre thing after all of this protesting over the weekend, the truckers and everything, and Trudeau like hiding from it. Oh man. Okay, and there's the ES back at highs and making another push. Go, go, go. How about I don't keep up charts of rice and beans. I only keep track of the corn and maybe soybeans. I have a chart for soybeans up. Look, there's another good uptick, man. Hmm. Now that we getting like a ton of pivots up here around the 44.35 area, right? So that should start to get interesting. He did quick scalps with that iceberg at 420. Hmm. Oh, so you kind of like the very top of it. Hmm. I'm seeing some volume come across here in the 10-year that's buying. I'm not necessarily seeing the 30-year buying, but I continue to see flattening, by the way. So you can see the treasuries, or sorry, equities being awfully cautious in this 35 area because that's like overnight session highs. Title for today, Seth predicts a rally, maybe. I don't know, man. My success in the equities, I don't think makes up for how dismal I've been in the micro treasuries. Man, I cannot get a single effing tick. What am I doing wrong? Why am I seeing it so bad? Hmm. I don't know, guys. You are the saddest profitable trader I know. I wouldn't put myself in the category of profitable, but sometimes. Mm. I really, what I should have done is I should have cut. But no, I didn't put the live. I didn't put it in live on MES. I mean, I probably should have, but I just feel like when I start taking trades in MES that, well, it wasn't just MES, like oil too. It's like when I start taking on that more risk, then that's when things start going south for me. So I kind of said, Okay, it's fine. It's not about the money really. Anyways, we can take some trades over there. It's okay." Over here in the micros, to me, it's more like how much if I get a winner, how much unfavorable excursion did I get on it? Like that's the thing I'm trying to minimize over in there right now. So when I come in and I have a day where like I literally only got like 3 ticks favorable excursion, that's why I'm so frustrated because it's really not trading the way that I expect. The trades that I'm taking are just ending up being complete nonsense. I mean, we'll see. Because my working theory is that we should see buying in the 10-year today. So it could be that it's just a lot of trop, and that in the end, maybe after the European close, that they do buy it up. But we'll see. It's also day's not over here in MES because I want to try and hold that to the end of the day. So we still got to make it through 35. Trades, it's not over yet. So the 30 years is having bit of a roadblock there at 10. You see that buying there at 09. That's probably the market maker trying to rebalance his inventory. Okay. And they made it through a really key point now in the treasure or ES. Then we get to 45 is the next. That was from, what was it? Wednesday's high? Oh, that was the FOMC high. Yes, the FOMC high was 44.50, 44.45. Let's see here. The DVO1 and the 10 PN is 2-1, 3 lots. And the 10-year is $10 a tick, so it should be between the 3 to 5 ticks if it's perfectly up. Yeah. No, that's right. But I'm getting like 3 to 4 ticks the wrong way every time. So I was saying that it was like, well, maybe I'm taking too hard of a stop, because if I had given myself a bigger stop, I could have just stayed in with my original trade the whole time, right? Or my second trade the whole time. But I'm just like, it's not giving me any favorable ticks at all. And it will maybe come back to my spot, but then I still don't get the favorable tick. It's 'cause- well, I think that we have edge sometimes, but so far today, it looks like that the flows that I've been expecting to see haven't necessarily come through in the treasury. So it looks like I've been wrong on the treasury and I've been right on the ES. Now again, if if ES gets like is able to hold above this 45, that's like a pretty critical, like the technical analysis people are going to really love that. 10-year has such a huge spread. Well, this one right here, when it's 2, which is what it usually is, it's not very nice, is it? 50-50. Well, I think that this trade was more than 50-50. This was, we knew something and we got a good trade off of it, and we executed it well as well. Like I was able to um scalp the range twice without it taking any unfavorable excursion. Now that part was lucky, but that part was probably luck. But the fact that we chose long and it's going up here in ES, that's not. I don't think that's random. MES looks like a home run. Yeah. Well, we'll see how far it goes. 45 could be where it stops for all we know. Yeah. Mhm. I could certainly, I tell you, like if I wanted to be like, um, if I wanted to make as much money off of YouTube as possible, I would just come in and only trade sim contracts, tell you all that it's live, and then hold really, really wide stops and take teeny tiny little profits all the time. And it would seem like I'm always winning. It would always seem like I'm winning. At least in ES. It's really hard to do that over in the treasuries. But you could do that in ES. Just sell courses, yeah. I do want to write a book. I really do. Something that really drives me crazy is like, sure, you can charge a lot for education because it's like not as many people buy it anyways, and so to justify the cost of the initial cost has to be a lot to begin with, and it can be very, very valuable information, right? But what I'm seeing a lot of now, especially through TikTok, is that people will create a course and they'll be selling a course for a relatively expensive amount, and what is contained in the course is not worth what you're paying. You know what I mean? Like I think about, I don't know. I'm not going to go into any specific examples, but I just think that when you're spending hundreds of dollars, that you should be getting a decent amount of content. And I've seen many of them where I heard about a course and then so I go and I search them, and like what comes in the course is like, oh my gosh, just go and buy um trading in the zone, dude. It's the same information for cheaper. If you create a ninja script programming course, I would buy it. Well, I feel like, I don't know, I feel like I gave you guys everything that you need to know for ninja script programming through the videos already. It's probably not the case, but I suppose it's that I just don't know what it is that I would need to do to get like people that are really, really don't know any programming to get started. It's probably my problem there. But a book, I want to write a book. It will be an expensive book. It'll be like, an $80 book, but it would be a good book. I want to write a book, but I don't have the time to do that. I don't have the time to do that. And the live, I'm kind of coming to the conclusion that the live stream is unlikely to ever get super huge, you know? So, hey, that's okay. Like I was hoping that maybe we could get to 100 concurrent viewers regularly, but I think that 50 is probably going to be the top end of that. You should totally write a book. I think I'd do a good job of writing a book. And a lot of what I'm putting in the videos will probably become the basis for the book. And then in the book, I would just go into I'm able to go into a lot more detail, right? You're probably more qualified than anybody in the space. Well, I think I'm more qualified than anybody in the retail space. I don't know if that's all that qualified. I tell you what, the video that's coming out here at the top of the hour at 9 o'clock, I think is a keystone video for our channel. If there is a video on this channel that I would like to have the most views, and truly to the one that I think has the most useful information that you're not going to find anywhere else, sort of a thing, is the video that I'm releasing today. We're going to release another one in 2 weeks about the inelastic theory of markets, and that one is also one that I really hope does well. And there's certainly some videos about, like, why most retail traders fail and that sort of stuff that are important. But the most valuable information that I have to share, I think, is coming out in the video today. And then, of course, I'm not able to go into super heavy detail in today's video. So, tell me which of those concepts you guys are the most interested in, and we'll make deeper dives on them, right? It would move the way people think. I think so, yeah. I think that the book that I would write could be influential, yeah. I mean, will it be influential? I don't know, because I have a small reach and everything, but I do think that the concepts in there are things that would change a lot of people's minds if they really read it and it was convincing to them, because there are some things that we know that it's not necessarily gonna, like, guarantee that you make money, but it certainly would make you rethink the way that you're doing things, you know? So don't miss the video. Just stick around here. The stream will forward you to the video at the end of the stream. So everybody starts with a small read. Yeah, but we've kind of been doing this for 4 years. It's kind of frustrating to have been doing this for so long and see other people that have only been doing it for 2 years go viral and stuff. It's a little difficult. It's frustrating. Then I see these people that they only make YouTube videos. You never see any of their trading. They don't post any of their results or anything like that. And they're just like, hey, I am now a full-time day trader. And you can buy my course. And then I go and I research everything about the course. Oh man, I tell you what, it's really funny how people okay, like, if you buy a course, your tendency is going to want to think that the course was effective because you spent money on it, right? So you have a bias because you spent money. So when you see all of the people that bought the course that want to think that it's a good course and still want to support the creator and everything, saying like, well, it wasn't really any information that I hadn't found elsewhere, and it wasn't a whole lot, but I still thought it was a good course, right? When you hear that sort of a thing, that's when you know that it's like, this is not really worth buying. In trading, I have the feeling the less viewers, the better the content. I think that to some extent that is true. Like, I went and I did like our rundown of my rundown of finance influencers rather. And I left all of the futures trading people out because I think all of the futures trading people are good, or at least are being genuine. But when I go through this whole other list, like, the only person on the list that I was like I really didn't have a problem with was Graham Stephan. I can't say anything bad about Graham Stephan, but like almost everybody else on that list, I was like, what? I tell you, you know what? This whole thing about Meet Kevin, Remember that? He was always telling people just buy the dip and stay long and invest for the long term and everything. And then all of a sudden, out of nowhere, he sold his whole portfolio because he thinks that there is going to be a food shortage later this year, and that it is going to lead to, a recession and all of this sort of stuff, and that he thinks he can buy back in 2 months from now. And I'm thinking, hey, if this ends up being a really good rally, tomorrow there's some follow through, and the data that we get this week is all good, right? He is going to look awfully dumb. So I really hope that these indexes all go well. I hope that the stock market goes well, just so that everybody, you know, ignores Meet Kevin for making such a ballsy call like that and abandoning his audience. Lease a Lambo and buy a Rolex, and then you'll immediately get more viewers, but the wrong. Yeah, it's totally true, Big Toasty. One of the mistakes that I made early on was that on TikTok, a large portion of my subscribers came from a viral video that I made that was just funny and was about like programming. So like I was programming automated trading strategies, sure, but it wasn't really that core audience that I was looking to attract. So now I do those funny videos that are just about the biggest headlines for the day. And that I think is attracting a much more of the audience that I want. And I'm getting a lot more comments on my TikToks now as well. And when I trash technical analysis, I get more positive responses too, which suggests to me that I am reaching the audience that I want to on TikTok, right? Reaching the correct audience for us, I think, is really important, because most people aren't going to be successful with futures trading. They're just not. And we want to find the few that are going to be really good, right? Brian Watt, trades by Matt, Cardinal Cash. Yeah, when I was thinking futures, I was thinking more like Futures Trader 71 and Gary Norden and um, Anthony Crudelli. I think those are the biggest influencers in the space. Probably Futures Trader 71 and Anthony Crudelli are probably the biggest influencers in our space. But you'll notice, and again, this isn't a bash on them. Neither of them post live trading or any trading results, so I don't know how well they do or anything like that. But they talk about technical analysis kinds of stuff, right? And I'm here telling you that that stuff's probably not going to help you. So they still have good content overall. Yeah, those three are the only ones that you've seen take trades. You can't stand trades by Matt? He's been doing so well lately. He made a video with a really, really big YouTuber, and I think that really brought him a lot of viewers. I think well, yeah, so what Anthony Crudelli says is he was scalping the ES when it was electronic trading first started, and he ended up being the largest volume trader, and he almost pulled $1 million one year. And then the robots came and took him. And so when the robots came and took his business away, he had to readjust and he had to find a new set of strategies. And so now he kind of talks about doing more of a swing trade strategy based on technical analysis sort of a thing. And I don't know how well that works for him. I mean, he doesn't post his results, but you can certainly see the way that he talks on Twitter that, some days he does really well and some days he doesn't. So I'm thinking that it's probably not too different from me. I hope that he's doing a little bit better than me, because when my downturns come, they can just be so brutal sometimes. But Like this thing going on here in the treasury today is just like nuts, right? Well, the volatility has consolidated considerably over here, so yes, just it keeps pushing at those highs, so that's good. He's doing well. Yeah, he's doing well on YouTube for sure. But you're right. Like that. So this is my problem isn't with Matt. It's not with Matt. He seems like a good guy. My problem is with price action. That's a really I really I I've come to learn that I just really hate price action traders. They say so much nonsense and they seem so clueless to me. And there's so many of them. It's like it has become the dominant technical analysis strategy by far, according to every metric that I have, our surveys, um, search results, and everything else. Like price action and support and resistance is like the most popular way of trading. And if you say anything against it, I have a problem. Yep, 100%. I have a problem 100% with Max's style of trading. There's no edge to it. It's there are simply taking on excessive risk, and that's the only place that their profits come from. And that's why you'll see them that they'll tend to do okay, and then one day they'll just completely blow out. So somebody gave me, or I've read Mac's book, right? I think it's nonsense. I don't even think it's a real strategy. In fact, is kind of what bothers me about that. It's like when you read it, it's like it's a bunch of individual heuristics that are like, well, you want to take it when it does this thing, but not in this situation, and but they're all very general, so that you can never essentially the whole thing is written in a way that you could never write a programmatic strategy for it. Like it seems to me like it's intentionally written to not be automatable, because if anybody actually tested it, they would find out that it doesn't work. And then he has you take on a stop that's twice as big as your target. So he's intentionally putting people into a thing where they won't see the efficacy of the system until at later, right? So I got to tell you, if you buy a course or you're following an influencer, and the first thing that they tell you is have a stop twice as large as your target, that is a huge red flag. Okay. Not that you can't make money from doing that. There are some advantages to doing that, but essentially what you are doing is you are making yourself particularly vulnerable to fat tails. That's what it really ends up being. The long term expectancy of those strategies is still negative. The long term expectancy is still negative. And the only reason that they give you that strategy is because it will take you longer to figure out that it doesn't work. So they still get more positive press because of it. Yep. In the long run, it makes no sense. Right. Well, I think in the long run, it doesn't make any sense for a retail trader. Like the problem is that um you don't want to take on that much risk as a retail trader. I mean, like taking on risk is part of our edge, but the amount that they're having people take on, I think, is too much. I think that if you want to take on risk, that you should do the futures trader 71 way of doing things, right? But you have to understand that you're taking on risk. If you don't actually have a real edge behind it, then you're still going to come out. You're still going to have that day where you blow up. What's that book that you suggest reading? So, in the video that comes out at the top of the hour, where we'll talk about it and I'll hold it up, but so that you can remember, right? But trades, quotes, and prices, financial markets under the microscope is the book. Hey, look, I can hold it up really close and it will it will focus on it now because we have this great camera. So good. That's the book. That's if you want to get into market microstructure. And we talk about it in the thing where it's like, you know what? I can't necessarily guarantee you that whatever strategy you base, whatever strategy you come up with based on the concepts in the book, I don't know if they're going to make you money or not. I don't know if it's possible to some of these things in the book that it talks about are stuff that like would make a really great robot. It tells you everything that you need to know to make a really great robot. But can we do it? Well, I don't know. We'll see. Okay. But I tell you what, it's a lot better when you start with a foundation that you know is true at the very least. You know what I mean? Because what these price action traders do is they come in and they say, okay, well, in this situation, it's more likely for this to happen than for this to happen, and it's false. It's like the thing that they're saying, like the thing that they claim is their edge, is objectively false. Like I've gone in and I've tested because the big problem I have is that it is mostly based on like higher highs and higher lows. Okay. Like they call it price action because they want it to be like something different from technical analysis, but it is actually more like traditional technical analysis than it is like the new style of technical analysis, which would be like volume profile and like Wilder's stuff, right? Um looks thick. Better just listen to TikTok traders, right? Yeah. You can go and you can go and receive financial advice from a 21-year-old. That's what's a lot of that has been happening. You saying my 6-legged crab spider I drew on a 2-hour chart is useless? Yes. Anyways, so this is why I don't like price action trading. So it's not a knock on anybody that does it or anybody that believes in it and teaches it, but like the price action community as a whole really grinds on me because they're saying stuff that I know is false. Like there aren't the probabilities in those areas that they say they are. In fact, the evidence that I have says that the market likes to go to those places and just chop around, and that it's incredibly random in those locations for starters. And then on top of that, it's just like it's like this cult now. Like if you go on to the day trading subreddit, you know, you say anything bad about price action, you just get downvoted into oblivion. So it's not just that, it's like the price action traders are holding back the entire trading community by continuing to push these misconceptions about the way that markets work. And that's what I'm trying to push back again. So I started out going, well, let's just backtest it. And I show you the backtest, and then the backtest should show you that it doesn't work. But you could see, those of you that have been here around long enough, and even with people that had been around in the channel for a long time and everything, that didn't convince them, did it? Didn't convince them. It doesn't matter how many ways you back tested it or whatever, they still believed that they could make it work somehow. So I'm trying the different approach now. The different approach now is, okay, look, if I teach you the real true empirical properties of markets, you're going to look at all of this other stuff and it's going to be like, well, that's all silly. This is serious stuff. This is like research backed scholarly studies. This is the kind of stuff that real institutions use to execute with and so forth. I wish that I had known all this stuff when I worked for Goldman. I mean, I think that the traders at Goldman knew this stuff, but they were even trying to hint, this is where to research or whatever, but I just didn't know enough to even have any clue. But now that I've read it, it's like, now that I've learned it on my own, it's like, oh my gosh, like this is just so much better. Like if you want to learn, like if I'm going to teach people, this is what you should be teaching them. Because I can't guarantee that any individual strategy is going to work, but I can teach you the things about the markets that I know are true, right? And the stuff that you learn kind of suggests that price action trading strategies won't work. What we know, what we learn, kind of suggests that price action trading strategies won't work. So the hope is that when people start to pick up more of this, that they will push back against this stuff more. That's my hope. Well, Seth, most people want the easy money and gamble it on meme stocks. I think it's more than that, Ben. I think that people naturally try to find patterns in things, and it's people's inclination to think that they can find a pattern in something that other people don't see and take advantage of it. So I think that the reason that it's the fact that price action trading is basically marketed as not technical analysis, but then in the end ends up being more technical analysis than other forms of technical analysis. Why is that? It's because they're still falling into the same trap, right? The mind wants to think that these things happen. Now, that's why I think that it goes the way that it does. And I think the only way that you get people out of that is if when they know other things to be true that directly contradict it. Because you can't just falsify it for some reason. If you just falsify it, they don't believe. They just think, well, if you could change this and this, and they want to keep digging. Let traders be? No. I refuse. I refuse, Lucas. I want to be successful. I want you guys to be successful, and I am never going to stop trying to teach you guys things that I know are true and can help you, and push against things that I know are false and harmful. Maybe it'd be good to have all these people. Maybe it's good to have all these people believe in price action trading. Probably is. Probably does help me, but no, I don't want to do that. I think that retail speculators fulfill an important role in markets that is sorely needed in our environment. We need better, stronger speculators, people that actually know what's going on and know what the market should be doing. My camera just died. So something weird. Your efforts will be futile. Well, it might be harmful to the image. Hold on. Let me turn it off here. I love the way that it just like freezes the frame there. So there's this issue with the Sony A7 camera where for whatever reason, the phantom power that I get out of the cord just from my computer doesn't charge it, and it doesn't charge it very quickly. And I have to plug it into the brick for it to really get powered correctly. So I don't know if there's a way to get like a maybe different motherboard or something. I don't know. But I do think that like if I were making YouTube videos that were all like just purely bashing technical analysis, that yeah, it doesn't seem to help. It doesn't seem to help. On TikTok, if I go and I make a video like, okay, if on TikTok I go and I make a video and the video is, okay, here's this person and he thinks that RSI works. So here's a back test of RSI that shows that it doesn't work. Doesn't do anything, doesn't help nobody, it doesn't convince anybody. But if I make a video that says, okay, well, people are using this strategy, but here is the fallacy. Here's what you have to do, right? This is an example of look back bias. That line wasn't the line that you would have chosen back then. And so you can't, that's the best fit line given the past action, but it's not going to be the best fit line going into the future. And you explain that to people. I've gotten much better reactions to that. Right. So it's, I don't think it's a lost cause. I think that it is a matter of just figuring out the right formula. Right. But like I said, I think that the thing that's done the best is showing things to the people that are truly backed. You know, man, that treasury had a pretty good run there and it came back quickly. You know, but when you share with people the empirically backed information, it helps so much more. They're so much more interested in it, and it's so much easier to see all of the problems then when you do that. Curious why you went with the Sony versus the others. So the main reason that I went with the Sony was because of its autofocus features. So did you see that when I put the book up earlier? It immediately focused on it, like you couldn't even tell. The autofocus on it is so good. And the reason that I wanted a new camera was two reasons. One, I wanted 4K so that I could zoom in on my face and still have it be good quality, which maybe isn't a good thing because my skin is not perfect. My eyebrows are not, I don't know. My eyebrows look uneven to me in this latest video. Should have said that because you're not going to like, oh yeah, your eyebrows. You need to pluck over on here. So. But and then the autofocus. So those two things, those are what pushed me. And then the other thing was that when the Sony A7 IV came out, when they announced it, rather, I knew based on the specs and everything that this was going to be like the camera. Like I think that a lot of the high end people, like the big YouTubers, FX3 is really like the sweet spot. Like the FX3, not the sweet spot, but like for what if you're making videos, the FX3 is the best YouTube video making camera. Anything beyond that, you won't get any benefit from it unless you're doing like recording a movie. Okay, so FX3 is as far as it could go, and even FX3 is a little bit overkill, right? And then there's the A7S3. And I think that a lot of the high end people will still go to that because it allows you to do 120 frames per second 4K still without a crop. But for the majority of people, the Sony A7 IV is going to be the best option for making videos. It's the most flexible. And so I immediately recognized that. I was like, well, I want to get on board now. If I'm going to get a new camera, I want to do it now. I think I should go and sell the other camera. I was thinking, well, let's just keep the other camera around and see if we end up using it or see if I get my wife to use it. Now I'm thinking, nah, like they don't do that. She's not going to do that. I need to, so I'm still working on my wife here. And it's kind of dumb to be saying like I'm working on my wife, but the thing is I think men and women, well, not I think, the most significant difference that they found between men and women is in interest, and men tend to be more interested in things and women tend to be more interested in people, right? And so if I tell her like camera, here, learn how to use this camera and you'll enjoy it and you can do good things with it, right? I think that in her mind, that's a thing. She's not interested in it, right? So I've got to figure out how, the right way to present it so that it becomes about people. Like, right? Like, oh, if I learn how to record things and I learn how to edit it, it means things to people and it changes my relationships with people in a positive way, right? Trying to figure out, again, it's just like trying a bunch of different things and finding out like what's the kind of the message, what's the way of going about it that seems to be the most effective for people, right? And I'm doing that. I'm really interested to see in this video that we're coming up at the top of the hour, because I made a bunch of changes on that should increase our retention. Like retention was really good before, but I'm hoping that the retention on this video will be really high and that the algorithm will push a lot of people to it because of that. Hoping. I'm a Sony across the board too, but most go C or N. I'm not sure what you mean by that. If you're talking about the crop cameras. That was the other thing, is I wanted a full frame camera, but I guess I don't really need a full frame camera, but sure is nice. It sure is nice, I must say. Well, the S&P 500 hasn't been too bad, but it's just kind of chilling up there. I think that I am gonna put a stop right there. It's a thing. It has no feelings. This, yeah, photography. That I think that to get my wife interested in it, that I have to turn photography from this is an object that's a cool piece of technology into a thing with to do with people. I think another part of it though is that she doesn't like taking pictures of herself, which is so funny because she's so easy to take pictures of, guys. Did I show you the one picture that I took of her? Oh my gosh. Oh, actually, I have it on my machine here somewhere. I think. I mean, I know I do have it on the computer somewhere. She's so easy to take pictures of, guys. Like she's barely wearing any makeup there. I think that she has like eyeliner on and that's it. I hardly have to do anything to it. It's just she's so easy to take pictures of. But for some reason she doesn't like having pictures taken. Like, okay, whatever. I have a couple other pictures I took that I should go and work on. I'm trying to take advantage of the picture taking aspect of the camera too. I hate it when it does that. Well, anyways. No, I still got a bit of time. You think so? So the treasuries have kind of been toying around with that high, but I think that eventually they are going to break through. I think that this is the kind of the buy meta order sort of thing that I thought it was going to be, but there's just not as much pressure as I was hoping, and that's why it's just like taking forever, right? Because I mean, they're holding these prices up here pretty well, and when they do make the moves, they're pretty good. I have finally gotten 7 ticks of favorable excursion, so that's nice. Almost 10. See, as soon as I start talking about photography, they're like, I'm not as interested in talk about the markets. Stick around because I can't tell you this video that I'm posting today. I feel really strongly that it's like possibly the most important video I'm ever gonna post. So I really hope it does well. Um, and I worked a lot on it too. By the way, you gotta know I spent like I must have spent I spent just 5 hours on Saturday just editing it and an hour or two, recording it. And then I must have spent almost half as much writing it. So I think that I spent maybe 15 to 20 hours making this one video. Set that new camera, what a find. I just need to make sure that I charge it with the other thing or go and find a dummy battery because charging it from my computer, it doesn't work very well. They're still pushing. 5-year is still a little reluctant to come along, so we're still getting a bit of flattening, aren't we? Anyways, I really like the camera. You know what my problem is now? Oh my gosh. You just always want to buy more stuff is the problem. Like cameras can just be this giant pit that you can just always buy more camera equipment. It's just But what I would really like is to have consistent base plates because if I want to move the camera from here to the camera that I've got behind me where I do my normal recording, or if I want to move it to my tripod to take it outside, I have to put a different base plate on it for all those three things. With that one over there, there's just no base plate. It screws in directly. That's really annoying. So I want to like get new heads so that I can have them all consistent, right? And then I want to get another light and I want to get a microphone. I think though that if I should save up and get the microphone. Hey NASDAQ killer, where have you been? Where have you been all day? I think that I should save up for the new microphone that is a shotgun microphone because then you won't see the microphone in the shot and it will be less likely to get the sort of thing in the video. I hate that. We were talking about making the video that I'm putting out at the top of the hour. NASDAQ killer. Salim. Oh, you're at work now. Yeah, I froze again. I didn't get the camera fully charged. Yeah, I know. I didn't fully charge the camera. So it died on us. If it's fully charged, I think we can get 3 hours out of it. But it wasn't fully charged. So I probably should just go and buy the dummy battery. I don't want to do that because there's no hole for the battery for the cable to come through, if that makes sense. Yeah, we are going to talk about liquidity holes. You know, I didn't go in as deep into liquidity holes as I would have perhaps liked because I didn't necessarily have enough time to make graphics for it and everything. But we do talk about it, so one of the problems with the liquidity holes and everything is that I think you really want to understand like the square root law and all of that stuff first. Because once you understand the square root law of that, then you go and look at liquidity holes and you can see how, oh, okay, the liquidity holes that gets because of this, you get a square root in it. And that must be why these other things are happening. So it's kind of like one step at a time, right? By the way, where was my original short? Sell. Oh, they were both at 99 and 196. So, but I could have gone short at A1/2 and just held that all day and I would have been happy. Oh, well. And it does look like, well, we'll see how much lower the ES goes down. I think that given my time frame, unless I wanted to hold this all day, that where I took my profits at 44.50 was a pretty good spot. I think that there is I'm a little concerned that we could come back to like 44.30 or so, which would maybe be like where the where's the moving average again? Yeah, 44 to 35. So we might come back and test that moving average. Although would probably make sense to buy it there again if that's what happened. No, I lost money in the micro today, dude. I had 3 trades in a row where I didn't get anything on it. It was frustrating day today. I did get one to run a little bit, but it's only pulling. So I think in the end I'm going to be like minus 20. Is what it is. I think like what I'm finding more and more is like when we're getting a really strong meta order and we're getting a trend, I can catch it. But that when it's not that and it's chopping, I do so terrible. And I think that that's because when I was doing it with the 10-year, with the full 10-year contract, I would just be like, oh, okay, I can just take one or two ticks here. When I'm doing it in the micros, it's like I got to get at least 4 the 10-year has to go at least 4 ticks for the trade over here in the micros to even make sense. Oh, I'm talking about the 10-year. In the ES, I took a sim trade, and that one was amazing. I used 2 contracts in the micro ES, and I made $325. And I actually used 3 contracts, but on max quantity 2. So that's $100 per contract. That's a good trade. That was a good trade, and we read what was going to happen on the open based on like the possibility of short covering really, really well. And I don't think it's necessarily done either. Like I think that there's still a possibility of further upside later in the day, but at the moment I'm too concerned about it coming back, and I don't want to sit through, you know. I hate when I leave the stream and I still have a position on and I'm trying to hold it, you know. That can be a little frustrating. Just because it distracts me, right? And I want to do real, I want to do as good as I can when I'm doing the day job, the real work, I guess. The market ear asks, is it time for Bitcoin to join the squeeze? Well, it looks like they've kind of been moving up too. Just a little bit, little tad, but we'll see. We'll see. It looks like that was it. That was it for that leg in the treasury. At one point there was a lot of flattening in the curve, but since then it's kind of evened off, and most of the spreads that I'm looking at are just going sideways right now. The 2 and 10 is still flattening, but like the 30 end of the curve appears to be just going sideways. So it's only the shorter end that's flattening. Hmm. Okay, cool. Progressive Democrat senators, including Elizabeth Warren and Bernie Sanders, are calling for the IMF to create more than 2 trillion in additional reserves to help developing nations cope with COVID-19. Okay. Hmm. Oh, is that the case? The January decline in Bitcoin of 20% is the worst decline since last May's dropping. And I'm like, oh, so it's only been a year since it's fallen this hard? I think the market will start pricing in the TWE starting this month, taking out the basket away from ZVA, at least from the March 22 contract. Wait, what does TWE stand for? Does non-farms affect markets as much as non-farms? Well, the what is the one that we call? There's I don't think that there is a farms report, is there? It's so funny, dude. There is all of the so like the ADP non-farm employment change, for instance, that happens on Wednesday, and then the preliminary non-farm productivity and labor costs and the unemployment claims. Like these all end up influencing the market because they're all trying to use those data points to predict what the actual non-farms will be. But it's non-farms continues to be an enigma. I have to say, every time that it seems like the analysts think they have it figured out, it will surprise them. So we'll see. This I mean, non-farms, I don't expect that. Well, what are they predicting? They're predicting that the unemployment will decline to 0.5% and the employment change will be 166 after a previous reading of 199. Oh, that's sorry. I'm average hourly earnings was the zero point 0.5 versus zero point 0.6. They expect the unemployment rate to remain unchanged. Yeah, the camera will be frozen until the end of the stream. And then we'll plug it in with the other charger and bring it back. But it won't happen tomorrow. Anyways, so I think that non-farm reading of 166 might be a little bit low, but I mean, man, if they were below 166, I'd be really surprised. So I don't think that non-farms is going to be really a huge deal. The one that's going to be the huge deal is going to be the CPI next week, right? So I don't have estimates for CPI this time, but there is clearly some nervousness about it. I think that the Federal Reserve, this whole thing about will we do a 50 basis point raise? And the Federal Reserve is like refused to say no, we're not going to do that. They've been like leaving it open that they could. And I think that that's because if the inflation number is really bad this month and the next month, then they will increase. They'll do a 50 basis point raise. So that means that if the number next Wednesday is bad, the treasuries are probably going to get destroyed. No, I was long. I was long ES quite a bit before the open, actually. So I got long at 44.05, I think it was. Yeah, it was 44.05, so pretty close to the bottom. And then I took one contract off at 44.15. And then when the market opened and they sold back down to that location, I took a second contract and I took that one off at 44.15 as well. And then I let the last contract ride to 44.50, where after it got up above that area, they went and hit the stop. I could have still been in, but really because I was expecting that end of month flows typically tend to be a little bit positive, and there is so much short option interest out there, a lot of put protection out there, that I was expecting some degree of a short covering rally today. It might not be done. You might see if the markets are able to maintain these prices. Like, let's say that the market stays above the 200-day moving average, then I think you'll see a massive short covering rally into the close. So that was the trade thesis on that one. Over here in the treasuries, it's the same thing. Generally, end of month, they tend to buy. So that's why I wanted to be buyer. I did take a short at the beginning because there was just the order flow looked so aggressively short at the time, but that was a dumb trade. And then ever since then, it's just kind of chopped around. So oh, were you along on that one too, YouTube Finance? I don't think I ever had one. Yeah, on my well, I think I did have some adverse excursion. Yeah, I had 9 adverse excursion on the main ES one, but I'm really coming around to this idea that how much adverse excursion you get is a really important metric. And your average excursion is probably not good enough. I think that it should be like adverse excursion per profit. And that would factor in all adverse excursion you ever had. So if you had a strategy that was taking large stops, like say that your average excursion per profit was more than your average profit, that's a problem, isn't it? That means that your entries aren't really very good. It took a long some minutes after the open, but you couldn't get executed. That's unfortunate. Like the game is rigged. Wow, kind of is. It's not that it's rigged per se. I don't think so to me rigged would be like we intentionally set this market up for retail traders to be screwed. It's not that. It's that all of the good edges have been dominated by institutional players, and there's nothing, there's no crumbs left for the rest of us most of the time unless you're getting a good strong move. And that's kind of what I feel. And so, like, you're trying to do arbitrage or you're just trying to scalp in a range or anything like that, the prices that you're given are basically always disadvantageous. So you really truly have to edge. Like, I don't see any way around it with futures, at least. Options, maybe you could do it differently, but with futures, I don't see any way around it. You have to have a piece of information that has a strong probability of moving price your direction, which means that typically that they'll tend to be relatively strong moves. So trying to get runners makes sense. So you can't scalp. Well, I think that if you want to scalp or like do market making, I don't know. You might be able to get away with it in NQ. You might be able to get away with it in NQ. I'm not sure. I think that if you were going to do it in NQ, I would program it, but um, you know, there's certainly going to be some market somewhere that you could do it in. It's just like, well, like for instance, like Paul Rotter, right? He's like in Malaysia now, right? So part of it is that you're seeing a lot of these market makers that are really good at that, and they have that skill. They move to other countries where there was less efficient markets where they could find an opportunity, right? But it looks like you've been doing okay lately. Oh, okay. I don't do market making. I want the biggest, cleanest trend at the open. Well, then I guess that's probably a little bit different. Mark Long says you must take the overnight risk now, in my opinion. Going to SPY options versus futures is one method. Yeah, going to SPY options probably is one way of doing it, isn't it? Um, well, and I don't even know if it's necessarily SPY options per se, but I mean, it could be anywhere. You got to find a situation where the options are mispricing the risk of something, right? Like that trade that I took in oil was like a really clear example. Like I even showed you guys on stream, and Gary was like, "No, don't take it." But the market was clearly underpricing the chances that oil was going to go back up to the where the analysts had their price targets at. Like it just like boggled my mind. I just couldn't understand it. All the analysts think that oil is going to go to 85, and the options for United States Oil Fund was all saying that it's going to barely be able to get out of the range that it's in, down at the bottom after this huge washout. Like the options market makers got it wrong big time, right? Now I think that you can make calls like that on the S&P 500, but I don't think that you can make that call like every day. You know what I mean? Or maybe not even every week or every month. But there will come along every once in a while. Have you read a book called The Work of the Stock? And I've never heard of that. It details how institutions became dominant players in the municipal bonds, and that made them illiquid on the NYSE. Oh, yeah. That totally makes sense. I was thinking like one place that might be worth trying to play is like over the counter, right? I would be totally willing to play over the counter if it was something that I knew enough about that I could develop a model and a really good way to price, which is kind of where we spent the least research, right? So how much did you make on the oil options trade? I think I made $750, I think. Oh, I don't even know how I would look that up because once the position is off of the screen, I don't know how to check it. I don't know how to go back and have it show you like individual trades. But essentially, I spent $100 for a call option, and I made more than 5 times my money. So it was a good trade. It didn't quite make up for how much money I made in futures trying to play that same thesis, but what happened. We learned our lesson, I hope. Hey, it is time for me to get going. We should be watching the video. I've just totally lost track of time, dude. Guys, I will see you tomorrow. Make sure you watch the new video, and in the meantime, stay profitable, friends.